Where to put stop is the common question which is asked even in the comments which I see on my videos. Now, where to put a stop is a function of your setup first to start with, right? And even on a setup on which if I'm looking at a breakout as a setup, uh, the stop which I'm going to put or the breakout which I'm going to select to buy is also going to be a function of how much stop I can put on it. So if a stock is breaking out with a 20% breakout, unless I have the ability to put like 20% stop on it or put a half of the day's move or 10% stop on it, and if it doesn't meet my expectation of what is the likely profit going to be on that trade, I'm not even going to go into trades. A lot of trades which are possible and which a lot of other people take, especially in the lower price stocks, are going to require a stop of 20%. If you're going to trade stocks priced below $10, you're going to require a big stop. There is no way you can trade a stock which is trading below $5 with the kind of stops which I use, right? So stops, there is no generic answer to this strategy. It is a question of what is your setup. Now, when I trade something like a earnings episodic pivot, I'm willing to give it a wider stop because in that particular trade, I am expecting 50%, 100%, 200% profit. So I'm willing to, at times, willing to put in a 10%, 15%, 20% stop on that kind of a trade. But when I'm doing a swing trading, I'm expecting only 8 to 10% once in a while, 20% kind of a returns, right? So I'm not going to be using a stop of 8% or a 10%. It just doesn't mathematically make sense to put a stop of 8% to get 10%, 12%, or 15%, or even for 20%. It doesn't make sense, right? So as a result of that, what is the stop? If I'm going to be buying a 4% breakout, doesn't mean that my stop is going to be 4%. I don't, because I will put a stop at half of the day's range, right? And that is why I will try and get in early, because if I can get in early, my stop will be closer. And that is why I don't buy a breakout which is very late in the day, right? Now there is a type of breakout where you can put a very close stop, and those kind of breakouts happen on higher price stocks. Higher price stocks have lower volatility. Higher price stocks don't move in the same increment as low price stocks like $3, $5, or $10 stock, right? And those kind of stocks are going to move in a very small increment. Like, you can have a stock which is trading at $300 or $400, and it can break out with just a 2% move. Now, if it breaks out with just a 2% move, you can put a very close stop and get away with it. If you find stocks which have very low volatility, or you time your entry with a low volatility, which is one of the setups which I trade, which is like an anticipating a setup. Now, in that kind of a setup, you don't need wide stops, because if you are going to be anticipating a move and you are entering in a zone where the volatility has declined significantly and extremely low volatility is there, then if you enter at the right time, your entry stop is going to be very close, even sometimes less than 1%, because the stock was so close. It was like having only less than 0.5 or 0.05% moves for the last 2 or 3 days, and then suddenly it breaks out. So stop strategy is a function of your setup. The setups which I try and look for are setups where I can put very close stops. So I go and find setups or develop setups where I can only put close stops. And that is why I trade certain setups like high price stocks, setups where the ability to put close stops allows you to quickly make big amount of money and put a lot of money into place. Because if you have a wider stop, then your position size has to be smaller, right? The reason why a lot of people lose a lot of money in the market is they're trading low price stocks which require higher amount of stops, and then they are doing size in terms of putting in a lot of money in those lower price stocks. And so the volatility is high, your size is high, and then if you make a loss, it can become a catastrophic loss. The other way of trading is to find setups where you can put a lower amount of stock. So I try and operate within 2.5%, 3% kind of a stop, but that is only possible if there are certain conditions which are met. One is if you are trading primarily high price stocks with very high linearity, which have very smooth moves, and then you're timing it right, then you can have a stops which can be as less than 2.5%. If you're timing your entries using anticipation, having a watch list and enter early, then you can have a close stop. If you are trading stocks which have very high linearity is basically like they have very smooth up moves and a very orderly those things, then in that case the stops don't get hit. If you are trading very volatile moves, then stops has to take into consideration that volatility, right? If you are using certain entry techniques, like when I am entering a trade in the morning, I use OPG or market on open order. OPG is also called opening price guarantee order or market on open order. Now, if you can use OPG or a market on open order, then you get in at the opening print. So your stop can be very close, because if the stock is going to go up based on earnings, then you can put a stop which is very close, right? And you get a very good entry. So combination of things you have to work at in order to have close stops. Generically, a lot of retail traders have been told that you put a 8% stop. That's a very wide stop if you're going to be swing trading and your profit factors are not very high. If your profit factors are 30-40%, it might make sense. But if you're going to be like in looking at making 12, 14, 15%, or even sometimes 8 to 10% because of market conditions, and if you put a 8% stop, you are constantly going to be having a problem. So what are my stops? My stops are, if I am buying a breakout, my stops are half of the day's range, right? If I am buying a high price stocks, then sometimes they are less than 2%, because many dollar breakout, which is the setup which I trade, doesn't like break out with 4%. I don't trade 4% only. I trade lot more setups where I can put in closer stops. So stops is something which you have to really work at to reduce the stop. In order to reduce the stop, you need setup which where it is possible. You need to have entry techniques for that, and you need to have ability to manage the stop once you are in a position. Because sometimes you might start with a 3% stop, but by the within few hours you can move it to less than 2%, or even sometime move it to break even. So stops has a lot of facet to it, and if you really go deeper into the stop strategy and really map out a stop strategy, then you can reduce your stop. And the advantages of reducing your stop is that then a small move in a stock can become profitable.